now that that's been resolved. So once again this morning, due to the trending up nature of the market, I don't have a zone yet at Globex high. I'm hoping we simply push up to this 1872.74 by the open, and that'll resolve the issue. Otherwise, I'm going to have to rearrange this series of zones quickly to adjust for the odd place that Globex high is sitting at the moment. So let's kind of go in. First, I want to talk about yesterday a little bit. So there's two key factors. First of all, NQ is clearly weaker than ES intraday consistently for weeks now. Now, that does not mean that that cannot switch back and that NQ can't start leading again or play catch up, right? Where ES trades a little bit sideways while NQ catches back up. Or NQ can reassert its dominance, and if it stays weak, continue to roll over to the downside. There's been no technical damage per se in NQ. There's no reason why it can't retake a leadership position, but so far it simply hasn't. Also, one thing to point out, and everyone should have this on their chart, we've essentially been trending up, well, before London Open, but ever since London Open. A series of higher highs and higher lows. This is a 24-hour, 15-minute chart, right? So if I were you, I would simply take what looks like, this appears to be the trend line that we're following right there. So I would take that trend line and have it underneath, and I would keep a 24-hour chart. Essentially today, there is no downside unless, let me just one sec here. Unless we can get below this trend line. So it's important. It's not important that we necessarily find responsive buyers here, but just generally that we stay above. What this keeps me from doing is two things. First of all, if we're going to end up with a trend day up, which is possible, once again, we're gapping, and you have to be cognizant that we've just had a series, day after day of gap and go over the last 6 months, although that pattern has changed over the last 30 days. Okay, so how do you make sure you don't get caught in that, in a gap and go situation or an open drive higher? Well, one way to do that is simply to sit out the first 15 or 20 minutes and wait until that first 15 minutes is over, which will give you more confidence that you're not getting run over one way or the other. There still are plenty of trading opportunities without having to trade in the first 15 minutes or even in the first half hour. Secondly, we do have Econ coming out. I want to verify the time on this, but I believe it is 9 a.m. and I believe it is the ISM number. Let me see this. Okay, so at oddly 9:45 we have final manufacturing PMI. I don't think that'll have a huge impact, but at 9 a.m. Central Time, 10 a.m. Eastern, we have the ISM manufacturing number that does have the ability to move the market. Also keep in mind, when we have big data points at the top of an hour, it can start essentially a trend day up at that point. So you'll want to assess, right, the strength of the drive at that point. How do you do that? Well, first of all, look at the size or the rotation down right after that data point, right? And then, of course, if we start breaking new highs, and you can also tell with the velocity at which it breaks the new highs that it's possible that we'll have a trend day up from that point. Clearly, overall, on a 24-hour basis, we've been trending now. We're going into our third day of trending up. I want to show you what that looks like on a bigger picture as well, really quickly. Okay, and my point is, we're opening up. Okay, these were points of rejection. Okay, these three, let's see, 1, 2, and now we're, yesterday we were right, we just barely squeezed over this. These were points of rejection on a 24-hour basis. and most of this rejection occurred on US Open. Okay, so one of the things that I'm looking for, or one of the nuances that I'm looking for this morning, is to see, can we get underneath, first of all, yesterday's high right in here. I want to see if we can get underneath this level, because if we can, obviously we have a potential retrace situation back down to fill in all this area that's poorly auctioned. And we were really poorly auctioned from here to here, okay, and then again from here down to here. What does that mean? The market tends to want to come in and fill in these areas, okay, before continuing higher. And actually, even below this little level right here, which is gap fill, we were poorly auctioned. Really, this whole thing has been relatively poorly auctioned, but particularly in this area right here. So you want to mark below 1850 down to about 1845, right? Poorly auctioned. This area between 1850 and 1855, poorly auctioned. The market tends to want to come fill this back in. And then below 1862 down to 1857, this area has been poorly auctioned. And what the market tends to want to do is, just like this area was poorly auctioned, it wants to come back in, fill it out. Then once it gets through there, it's done its job and comes back lower. So we shall see this area that we're in right now, by the way, really everything above here, the area that we're in right now, all of this is poorly auctioned, really all the way up here. The only thing keeping us rejecting is that people are looking for a potential, are seeing this as a trap trade, right? You can see this area was resistance, okay, and this area below became a trap trade. You can see that we've now tested this area 1, 2, 3, 4. We're on our 5th time to test this area, and just like any support resistance area, the more time it gets tested, the weaker that it gets. Okay, so there's truly not holding us much back from coming all the way up. I believe 77 is the very top end of this level. I may be wrong on that. It may be 76. It's 76 and 3/4. Okay, but I just want to remind y'all, in this area up here, the only thing that people would look for to find rejection is if they're going to work off the concept that this is going to be a double top, top of the range, and then it is very possible that we push back down, right? The price action will tell us. A bigger picture, that's what's going on here. So let's flip back quickly over to the chart. Okay. Didn't work out. So, what am I looking for in terms of where I definitely want to take my first shot towards a short side trade? Well, I can tell you right now, it's right in here at this year-to-date high. So what would give me caution here is the first thing I've been going through in my trade plan overnight. Okay, well, if we're opening at 1870 or 1872, right, I want at least a minimum of a 6-point rotation before I'm going to take a short. Okay, that ought to put me right at the back here, and I'm looking for a 2-point rotation lower. If I get an open drive higher, and again, let's go through the concept of open drive higher. Okay, it's either one solid bar. Usually that bar's somewhere between 5 and 7 points on average, at least in the last couple of months. Okay, if I see a big solid bar like that, my assumption is until this bar is violated on the downside, that we are going to have an open drive higher. Okay, the other way that can look can be 1, 2, 3 bars. The first 15 minutes, each bar is higher than the other. These two are picture perfect of what a trend day up looks like. Here, let me switch to white so it's a little bit easier. Okay, the other thing is, if we're opening right here at 1870, of course I'm not sure that we are, but if we're opening at 1870, right, first question is gap fill. Can we get to gap fill? Or the next question, 1870, 1863, that's obviously 7 points. Split the difference. 3.5 points back would be a half gap. Okay, and by the way, I float my half gap. In other words, if we open, and let's say we come up here and then reject back down, okay, I move my measurement up to here. So in that case, it would be 1874 down to approximately 1863. So at that point, half gap becomes 5.5 point rotation lower, would become half gap for me. Okay, and then we have gap fill. So if we can't get half gap, right, and we can't get gap fill, I know that we have strength. If I see these two things occur, and I want to be safe is the wrong word, I want to use safe. If I want to be on the less aggressive side of this formula, okay, that means that first thing I'm going to do is I'm going to look to wait to trade till 9:30 to this 11 o'clock frame of time. If we trend day up and you don't want to get run over in that process, right? That is the easiest way to reduce your risk and increases your odds that we'll start to either get balance or failed range extension. In the prior 6 months, prior till about the second week in March, right? There's been two common patterns that we've been having pretty much every day. Okay, push up, down day for the first hour, we push down to the first 1 hour to 2 hours, come back up approximately halfway, and then in the afternoon we either push higher, trade sideways, or retest the lows. Retesting the lows has had the lowest number of occurrences. The push into the middle has had the highest number of occurrences, and there's still a fairly high amount of occurrences where we get a mirror image move back to the top. There is no mirror image to have in this particular case because we've just been pushing up the last 3 days, right? The mirror image would actually look like a downside move. Okay, that being said, we've switched now lately. If we get an open drive higher, tend to open drive to be about 9:30, and then one of two things that happened prior to the middle of the month. We would either go to a balanced scenario where it would look something like this the rest of the day. Basically, if you take yesterday's gap and you look at the pattern of trading we had yesterday, we were basically in balance all day long with the open drive was essentially stolen overnight. Okay, so what will that look like on your charts? We will go from a very positive tick or a very negative tick, depending on the scenario, to after 9:30, 10 o'clock, to the tick staying predominantly plus 500, minus 500. If you see that on your NYSE tick, you got to make a shift to going, oh, we're in balance. What happens in balance? In balance, markets tend to look like they're about to break out. Everyone jumps in. It reverses back down, goes to the other end of the range. Market looks like it's about to break down. We're in balance. They trap the people down here, and they move it back to the other end of the range. Pretty much exactly what happened yesterday is exactly what happens in balance. So we can shift from a driving market to a balanced day. Okay. The last scenario we've had is if we open drive higher, and then we balance and push up all the way through there. So this has been a bit sneaky in the way that we've been coming back up to the highs, and the reason it's been sneaky has been because NQ is not participating as strongly as ES has. In addition, if you'll look the last couple of times, and I'm going to pull this up here real quick in a new chart. Okay, each time we've been up in this area, okay, we've rejected out of it repeatedly, okay? And we did not reject yesterday, okay, but it does not mean we can't reject right up into this area and push down. As a matter of fact, it would not surprise me out of the gate, even if we're going to have a strong day due to the news, that we don't get an initial push down, and then it's a coin flip from there. Again, the point of my trading plan is not to prognosticate what we're going to do. If you'd asked me yesterday, I would have said we were going to come back in and fill some of this area down here. We certainly still may do that, okay? But the first thing that has to happen in order for that to happen is we're going to have to get back below yesterday's high. Second thing is we're going to have to get below yesterday's low. Okay, so really, until we pierce 1860 and hold below, I would kind of assume that since we've had 3 days up at this point, that we could get a fourth day up. I don't think anyone's really expecting that, which in my mind gives a stronger probability to that happening. My guess is that's going to hinge entirely on how that econ data is interpreted at 9 a.m. And I have no clue how that's going to happen, nor do I care. I'm just looking for my setups. Okay, so let's go back to the chart real quick. Okay, so all that being said, first time into here with a